Hi, this is Carlos Garcia with Garcia Properties. Welcome to our video blog. Thank you for joining us. We are the top Keller Williams team in the Washington, D.C. area. We're with Keller Williams in Washington, D.C. at Keller Williams Capital Properties. I wanted to thank you for joining us. We're going to talk about inventory and market trends right now. With the government shutdown and with the sequester still in front of us also, people are feeling a little pessimistic lately and asking very important questions like, where is the market headed? It is true that there have been some recent events and some potential upcoming events that have a downward impact on our market. I'm here to just briefly touch on those. I've mentioned two of them already. Down the road, potentially the sequester. Secondly, you've got the ongoing government shutdown, and then recently this summer a very quick, just about 1% rate increase, which was hard for our buyers out there to digest so quickly all at once. Well, those are certainly negative forces that have the tendency of making things, say, a little bit tougher for sellers and potentially a little easier for buyers, although rate increases are not welcome by buyers. Having said that, I still think that the fundamental main issue in Washington, D.C. impacting supply and demand is going to really be the lack of supply. Now that we're into the fall season, post-Labor Day, we have seen some more inventory come on the market. That is a little different from the slow summer months we had, but based on current trends and historical standards, we are at a very low point in terms of inventory. We're coming off about 2 straight years with 20 to 30% drops in inventory depending on your location and price point, and this year there's also been some more diminishment in inventory. That right there is only one factor, but it's a very, very powerful one, and at the moment it appears to be more powerful than some of the bumps in the road that we appear to be hitting. In addition, I'd say another big factor, and it really relates to everything I've mentioned, is that even with the government shutdown, we remain one of the best job markets in the country, and in order for a person to feel confident enough to buy or rent a home, they have to have a job. And with this robust job market, especially a very strong young professional segment, we're seeing a lot of growth and growth potential in our market. Builders are still developing condos, and house flippers are still going in and taking resale inventory and turning it around, refurbishing it. That's still a robust part of our market. So overall, it's a mixed picture. There are some market forces placing upward and downward pressure, but at the end of the day, some of the largest factors, the most important factors, seem to be the strong job market and the lack of inventory. Who's this good for? Well, the lack of inventory certainly makes it tough on buyers and makes it a little bit more favorable for sellers. Of course, with rates having risen already, they're still at historically low places. Recently, in the last few weeks, rates have bumped down a little bit. They were about 4.5, 4.75 in a lot of loan scenarios. More recently, we're seeing more 4.5, 4.25. By historic standards, still great rates. So, it's interesting. It's a mixed picture. At the end of the day, what we want, those of us who are in the market, is to see some measure of balance. I think that we're seeing that right now. Perhaps the market had heated up a bit too much, and some of the negative pressures have cooled it down just about right. It seems to be a pretty even market, if you ask me, as a person who's out there day to day. Again, I'm Carlos Garcia with Garcia Properties. I want to thank you for joining us on our video blog. Hope to see you out there soon.